It is imperative that we grasp the realities of the current situations and take measures to protect ourselves from potential harmful implications. In recent times, we've witnessed a roller coaster of events and emotions in the stock market. It's a domain where fortunes are made and lost, a place where bulls and bears continually clash in a battle of wits and financial acumen. Over the past week, we've seen a whirlwind of market activity that left investors reeling, with portfolios bleeding substantial sums in a matter of days. The climax of this whirlwind is undeniable: the stock market is in tumultuous waters. We've seen stalwart companies such as PayPal and Tesla, giants in the tech and financial sectors, tumbling at an alarming rate. For some, the losses have been catastrophic, with portfolios down tens of thousands of dollars in just a few short days. The feeling of watching your investments disintegrate is akin to witnessing an annihilation, and it can test the mettle of even the most seasoned investors. But here's the thing: this is not an isolated event, and it's not confined to a single company or sector. It's a broader issue that extends to various stocks and sectors. Stocks in renewable energy companies like SolarEdge and Enphase have been obliterated, with losses exceeding 70% year-to-date. We're talking about well-established companies in sectors considered to be the future. The Nasdaq, the tech-heavy index that has often been a beacon of growth, has been marred by severe losses. We've seen companies with strong earnings reports get pummeled, while investors scurry for cover in the face of uncertainty. The financial world can be a brutal and unforgiving place. It is not for the faint of heart. Just as in sports or any other competitive arena, there are mental barriers that one must overcome to thrive in the stock market. We are like athletes enduring rigorous training to build our financial resilience. There are financial hurdles that we must leap over to prove our mettle. A portfolio being down over $1,000 in a week is one such hurdle, and it separates the resolute from the hesitant. A 5-figure loss in a week is another milestone, where only the toughest survive. We have to push through these barriers, for pain is just weakness leaving our financial bodies. As we traverse these treacherous waters, it's important to consider the 4 realistic scenarios that could play out in 2024. These scenarios encompass a broad spectrum of possibilities, from bullish to bearish and everything in between. Anyone who firmly believes in just one of these scenarios may be misguided, for the stock market is a complex entity, and it's subject to various influencing factors. The first scenario is a bearish one. It involves a recession in 2024, job losses, declining company revenues, and the Federal Reserve resorting to rate cuts in an attempt to salvage the economy. It's a gloomy outlook, and while it's a possibility, it's not the only one. The second scenario is even scarier. It envisions a weakening economy, high inflation, and the Fed raising interest rates. While it's not a full-blown recession, it's still an unsettling picture of economic instability. The third scenario is a mixed bag. The economy grows stronger, unemployment remains low, and real wages start to rise. But this might lead to an overheated economy, with the Fed potentially raising rates. It's a scenario of uncertainty and balance. The fourth scenario is the positive one. It paints a picture of a robust economy, low unemployment, rising real wages, and a recovering housing market. The Fed might even consider lowering rates. This is the scenario we all hope for, but it's not guaranteed. We must remain vigilant and adaptable, as the stock market's future remains uncertain. Each of these scenarios holds its own set of challenges and opportunities, and it's crucial to consider how they might impact our investment decisions. Now, let's delve into the current situations of specific stocks. PayPal, for instance, has faced significant recent losses. The market is treating this stock as if it's in disarray, while, in reality, PayPal's fundamentals are robust. It's trading at a price-to-earnings ratio that seems unjustifiably low. Is the market being irrational, or are we not seeing something? It's a question we need to ponder. Enphase and SolarEdge, both in the solar energy sector, have seen substantial declines. They are being treated as if their future is bleak. But the truth is, The entire solar market is in turmoil, and we can't predict the forward price-to-earnings ratio accurately. We are navigating uncharted waters. And what about American Express? A company with a strong history is trading at valuations that suggest a looming recession. It's as if the market has already decided the company will suffer immense credit losses. Now, let's look ahead to the upcoming earnings reports from Meta and Amazon. These are two behemoths in the tech and e-commerce sectors. Meta, the parent company of Facebook, is expected to report strong earnings, and its future prospects appear promising. Amazon, an e-commerce giant, is poised for an impressive quarter and is likely to exceed expectations. Both companies are well-positioned for growth. In the midst of these turbulent times, let's reflect on the opportunities that lie ahead. The stock market is a dynamic entity, and its movements can be both exhilarating and exasperating. By understanding the potential implications of each scenario and keeping an open mind, we can navigate these treacherous waters. Remember, it's not about being swayed by the market's short-term emotions. It's about having a clear investment strategy and sticking to it, even when the market seems irrational. Embrace the uncertainty, for it is the breeding ground for opportunity. In conclusion, the urgency of the moment cannot be overstated. We must be vigilant, informed, and adaptable in the face of market turmoil. The stock market is a battleground where fortunes are made and lost, and it's our responsibility to protect ourselves and our financial futures. As we confront these challenges, remember that every hurdle is an opportunity for growth. It's pain leaving the body, weakness dissipating. We will emerge from this stronger, wiser, and ready to seize the opportunities that lie ahead. Stay the course, stay resilient, and together, we will navigate the tumultuous seas of the stock market and emerge stronger on the other side.
Before you go, help us by smashing that YouTube like button. And subscribe to this channel, so you won't miss any of our videos. This shows YouTube algorithm that you value our information. And it helps us spread the message. Sharing is caring.